Hello my fellow investors and welcome back to another fundamental analysis video. Guys, earnings season begins on Friday and then into next week. And as you guys can see, I still have 6 companies on the freaking wheel from July. So I need to get through these. Now for the rest of this week up until actually even into Friday, we're gonna just be doing this. Mike is not gonna be doing any videos, so yeah, it'll just be me doing this wheel from your guys' recommendations. So just keep that in mind, because on Friday we are going to have the live stream for the earnings for the banks, which is gonna be crazy. It's also Friday the 13th, so it's a little bit of an omen right there. And also on Thursday, CPI comes out, which I will actually be here to cover as it comes out. But let's actually spin this wheel to see which company we should analyze today. And it looks like we got the company gold. All right, we got the mining company. All right, this is going to be a nice one. It's going to be a nice one for all you gold bugs up there. So yeah, guys, this one was brought up by the commenter Axel Olvera. All right, so I don't know if you're still watching, but congratulations. Your recommendation got chosen. And I've actually just realized I've been forgetting to put the comments. So here is Axel Olvera's comment where he recommended gold. So guys, let's take a look at this company and see if the current share price is a good buy. Of course, their fundamentals as well, and make a final determination on this company. So guys, this is the company Barrick Gold. So right off the bat, please remember that when it comes to any commodity-based companies, they will very strictly fluctuate with that of their respective commodity. But this is still a company that mines gold and other metals as well. And that does require some kind of effort, as well as they also have a revenue and a balance sheet and all that stuff. So very, very different than just investing in gold as a precious metal, as I know some people like to do. But me personally, I would prefer buying the company that mines the precious metal as opposed to just the precious metal alone. And to see what also they mine, we can see here that on Seeking Alpha, they mine gold and copper properties. Okay, so I guess there's only 2 things. I thought it was actually going to be a lot more than just gold and copper, but all right, it's actually just that. They have companies, guys, in Mali, Tanzania, United States, Dominican Republic, the Republic of the Congo, etc., etc., etc. So yeah, they are pretty much all over the place when it comes to this kind of industry. So let's take a look at these past earnings. We are not going to go over their actual earnings report. The summary will do enough. And again, they actually are coming up with their next earnings on November 2nd. We'll cover that when that happens. But this past earnings, guys, EPS normalized actual came in at 19 cents, beats by a penny. GAAP actual 17 cents, misses by 2 pennies. And the revenue of 2.83 billion misses by almost $100 million. So with that said, let's take a look at now the calculator. We got the ticker for GOLD, market cap of almost 26 billion with a PE of 14.42 with a current share price of $14.85. And of course, if we take a look at this graph on the 1 year, they're down 2.44. Year to date, they're down even more. Wow, that's crazy. 16.71%, guys. 52-week low, it is $12.97. 52-week high being $20.75. Now, as I said earlier in the video, remember that when it comes to commodity-based companies, they will follow their respective commodity. Oil companies will follow, or at least upstream will follow crude. Copper will follow copper, gold will follow gold, etc., etc., etc. And here we have the graph for the gold spot price. And as you can see, currently gold is at $1,862. If we take a look at this in the 5-year, we can see that this is pretty much all over the place. However, gold has gained a pretty good amount the past 5 years, 55.54%. However, whenever you see a trough in this graph, expect for their graphs when it comes to like their profit metrics to go down, because again, it will follow gold's respective price. Granted, that's not necessarily 100% true, because they also do copper and they may also do capital expenditures as well as acquisitions, but all in all, it should follow gold's specific price. Coming back into the calculator, we can see that they do pay the dividend of 40 cents per share, which is a yield of 2.74%, a payout ratio of 67.8, a 5-year CAGR, that's a massive 5-year CAGR, 27.23 with 0 consecutive years. However, if we take a look at this dividend history, we can see that this is actually all over the place. Wow, you can see that they, wait a minute, what? That's 10 cents over here, but then they have 10 cents over here. I am so, oh, this is a special. Oh, okay, I see. So when it comes to this dividend, they do a lot of special dividends, as you guys can see right here, whereas the regular one Yeah, but even the regular went from like 14 cents down to 10 cents. So this is a really, really interesting one. Man, when it comes to the dividend, I guess, consistency, it's very, very difficult to see. Ex-dividend date passed as of August 30th. Payout date was on September 15th, and they pay their dividends quarterly. Based on the current shares outstanding and this 40 cents in annual dividends, they pay out $702.2 million. And after this is paid in regards to their 5-year average free cash flow, this is $744.8 million. And as of their last year's free cash flow, it is negative 270. So this payout ratio for the last year's free cash flow is really bad. 5-year average is a little bit better at 48.53, but this is very concerning. I want to see if this is a trend or is this just a one and done kind of scenario. Taking a look at now, guys, the net income. We got 5 years ago of negative $1.55 billion to 1 year ago of positive 432. That is an increase of 128%, but man, take a look at this massive swing from negative to a positive $4 billion and then just consistent decreasing after that. Now, based off of this, guys, this isn't looking too good. Again, very, very consistent with that of gold, if I had to guess. So I'm going to say, guys, around a 30% or so. Looking at now the free cash flow, this isn't looking good at all. 5 years ago, $365 million. 1 year ago, $432 million. That is an increase of 18% with an average of $1.45 billion. But take a look at this, guys. This is just horrendous. You can see that they peaked 3 years ago, probably because of COVID. However, it's just been downhill after that. This isn't consistent in the slightest. I gave the other one 30%. Guys, I'm gonna have to give this one a 20%. The revenue's looking somewhat better. We can see 5 years ago of $7.24 billion, 1 year ago of $11 billion, increase of 52.05%. Peaked here during 3 years ago. However, you can see that it actually is coming down once again. This is very consistent. From 3 years ago to 1 year ago, it is consistently decreasing, though the rate isn't as bad. So I'm gonna have to give this, guys, maybe like a 40%. The assets minus liabilities is actually not looking too bad. We see a massive spike from 5 to 4, but it's been very consistent ever since. Average total assets, it is $45.81 billion. Average liabilities, it is $14.5 billion. Doing this difference, we get $31.32 billion. I'm gonna say, guys, at around like an 80%. The cash flow minus liabilities has been fairly consistent. However, once again, from 3 to 1 year ago, it has been continuously decreasing at a very consistent rate, actually. Now, 1 year ago value, it is negative $14 billion, where the average, it is almost negative 13. So that is a little bit lower, but all in all, I think it's kind of consistent, though the trend it is to come down. I'm gonna say at around like a 45%. Shares outstanding isn't looking too hot if you take a look at it from the 5 year. However, when you take a look at it from a micro scale, it actually isn't too bad. 5 years ago of 1.2 billion shares to today of 1.75 billion shares. That is an increase of 50.33%. And from the previous year to the current year, it is an increase of only 0.01%. The majority of this increase happened 5 to 4 years ago. And yes, ever since then, you can see that they've been fluctuating up. From 4 to 2 years ago, they brought up their shares. However, from 2 to today, they have brought their shares a little bit down, and a little bit down, but also increasing a little bit. So this is all over the place. I'm not going to take their 5 year ago too hard because it was 5 years ago. I don't think that they're going to do another massive spike like that. So I'm actually going to give this, guys, a 70%. And lastly, cash and equivalents, they currently hold $4.16 billion with an average of $4 billion. The overall grades is actually fairly interesting. We gave them an income of 30%, free cash flow 20, revenue 40, assets minus liabilities 80, cash flow minus liabilities 45, shares outstanding of 70%, overall grade of 42%. It is very below what I normally like, and it's actually kind of surprising because this is something that I believe Warren Buffett did buy a couple of years ago. I don't know if he still holds it, but he did buy it. Again, he may have gotten some special deal, but from my perspective, 42%, it's kind of lackluster. So with that said, guys, let's take a look at now the discounted free cash flow to see what we should pay for this company. And right off the bat, we can see that not adjusting for debt, this is $4.47, and adjusting for debt, $6.50. Now, that is a pretty big drop from $14.85, but let's see if we put in anything over here, we get some kind of raises, so that way it gets a little bit closer to the price. So let's put in the projected share buyback. I think that honestly, they're going to do -1, 0, and 1 in the next 5 years because it kind of just seems that way, right? It really just just seems that way. Now, when it comes to the revenue, if we come over here to Seeking Alpha, we can see that the forward revenue is estimated 2.05 with a sector median of 3.64. So that's very, very close to each other. I'm going to say for me at around maybe 1, 2, and 3% revenue growth. I think that's very, very fair. So with this, we get the target share prices of $4.59 to $5.02, and then adjusting for debt, $6.58 to $7.06, margin of safety of $5.10.15, $5.59 to $6.70. So yeah, very, very expensive as it currently stands. It's just that their fundamentals just aren't there. Like, their fundamentals are just really lackluster. I really don't understand why Warren Buffett liked or even bought this company. Again, I don't know if he still holds it, but I do remember seeing an article where he bought gold. So, and gold as in GOLD, not gold as in the precious metal, because Warren Buffett's really against gold. So the way that I see this is that the fundamentals needs to get better first. Even if the price were to be really like a great price to buy right now, I still would not want to buy it unless their fundamentals got better. But this is my personal opinion. Obviously, if you guys think different, let me know in the comment section below, as well as have these calculators for free. They're in the description below for that reason, guys, because this is not financial advice, as well as every investment is the present value of all future cash flow. So you guys should make your own financial decisions for yourselves. The only thing we ask for in return, if you enjoy this type of content, it is to just like, subscribe, comment, and of course share. Guys, we really are just trying to grow the channel. We're trying to get to 3,000 subs by the end of the year. I don't know if we'll make it, but we might be able to make it. We'll see. And for Rumble, we're trying to get to 200 subs. So let's see if we can make it on that one as well. We're only 20 away of that one and around 200 for YouTube. So again, like, subscribe, comment, and of course share if you do like this type of content. Now, putting this into a dividend perspective, putting in $5,725, this nets us $154.22. So it's not as good as it could be. However, they also do special dividends here and there, so it might be profitable. However, please remember that their cash flow is not at all on par with putting out this dividend. But then again, that might just be in line with how much gold, how much copper they mine, and what is the price that they sell it at. So all of that is intertwined. Now, in regards to the options chains, looking at the October 13th ones, we can see that there really isn't anything for the puts, and for the calls is a little bit more. However, man, there really just isn't anything here. So it is what it is. Here are a few of the options chains for October 13th, 2023 for the company Gold. All in all, thank you so much for the recommendation. I have done this company a lot before in the past, and I gotta say, I prefer Vale and Rio Tinto over gold. That's just me. So if you guys want to take a look at those videos, they are here on the channel. So yeah, do with this information as you will, guys. Link is in the description below. Please make your own financial decisions for yourselves, and of course, make sure to like and subscribe, comment. So that pretty much does it. Make sure to follow us on the new tech link is in the description below. So with that said, peace out, and we will see you all next time.